Hello learners, welcome back to my YouTube channel. Today we'll be discussing a question from KCSE 2012. So we're doing a discussion, question number 5A, and the question reads, the following trial balance was prepared by Laketi Traders on 31st December 2009. So we are given particulars there. We have the debit column and the credit column, and those are the figures that we are given. Yes, those are the figures that on the debit side. On the credit side, we have premises, debtors, creditors, motor vehicle, equipment, gross profit, furniture, stock, bank, cash in hand, general expenses, discounts received, commission allowed, insurance, lighting, salaries, and capital. And those are their respective figures. Now, what does the question say? Or what are we supposed to do? Now, we are told, using the information given above, prepare, number 1, a profit and loss account. Number 2, a balance sheet. So learners, we go straight to preparing a profit and loss account. Now, before we get into that, we need to analyze the details we are given in there in the trial balance. Which item goes to the profit and loss account? Which item goes to the balance sheet? So we start with our first one, the premises. This one will go to the balance sheet. Debtors also balance sheet. Creditors will post it to the balance sheet. Motor vehicle, that's a balance sheet. Equipment also, that is balance sheet. Gross profit, where do we have this one? Gross profit. Now this one will be in the profit and loss account. Profit and loss account. Someone will argue that you're supposed to take it to the capital. No, learners, remember, we are preparing a profit and loss account. Why? To determine the net profit of that given business by the end of the trading period. And therefore, this gross profit we are given here, of course, it was from the preparation of the trading account. So this is what the business got as their profit. Yes, as their gross profit. So by preparing profit and loss account, we will be able to get the net profit, which now in turn, we will add it to the capital on the balance sheet. Then furniture, this one goes to the balance sheet. Stock, balance sheet. Bank also is balance sheet. Cash in hand, that's an item for the balance sheet. General expenses, learners, this is profit and the loss account. Remember, our profit and loss account, we are going to have items, in other words, we'll be comparing income versus expenses. Income versus expenses. Yes. The other one is a discount received. Discount received. This is an income. Yeah, so to the profit and loss account, anything received is an income. Then we have commission allowed. Commission allowed goes to the profit and loss account. Remember, this is an expense, this is an income. Yes. Then we have insurance. Insurance, we have insurance. Insurance still is also an expense, so to the profit and loss account as an expense. Yes, as an expense. Then we have lighting, again to the profit and loss account as an expense. The same case to the salaries, and the capital goes to the balance sheet. So having that, learners, we can be able to proceed swiftly, because we just lift items from the trial balance directed to our profit and loss account. So we prepare it here and already started with the heading. So ours is just to feed the information there. So on this side, we start with the expenses. Which expenses do we have here? One, we are seeing here commission allowed. Yes, we have commission allowed there. is yes. Also general expenses. So we can start with our general expenses. We have general expenses. General expenses. Our general expenses is 117,800. 117,800. 117,800. Then we have commission allowed. Commission allowed learners is 12,400. We have 12,400. Then the other expense that we have is insurance, which is 7,500. Which is 7,500. Then we have lighting, which is 4,600. Lighting 4,600. We have lighting 4,600. And lastly, we have salaries, which is 78,000. Salaries 78,000. Salaries, which is 78,000. Then we go to this is the debit side. So onto our credit side, we have gross profit, our income, gross profit that was brought down. The gross profit that was brought down, learners, is this one, which is, you see, it's also credited. It has a credit balance. 1,960,200. 1,960,200. Then another one, we have discount received. Discount received by this business. It's also an income, which is 66,100. 66,100. Yes, 66,100. So if you add 1,960,200 plus 66, this is, yeah. So this one will give us what? So we need to get this figure. So we get the total income, which will give us as 300. This is 6, 12, carry 1, give us 10, and 2. So that is our subtotals for the total income. The total income amounts to that. And then we have on this other side, we have our expenses. So we get the total figure for the expenses, total expenses, get the total expense. So we add 117,800 to this, and to that one, and to this one. We should be getting around, this gives us 0,0,3,0,2, and 2. Yes, now we have our total expenses and our total income. Now looking at it very well, our income is higher than the total expenses. Therefore, we'll be required to balance our account by getting the net profit, because as you can see, the expenses are less expenses are less than the income. So how do we get the net profit? You get this total income, subtract. You subtract the expenses from the income, and therefore learners subtracting 2,026,300. Sorry for the mixture. So subtracting 220,300 from 2,026,300, what do we get? We are getting something close to, we can do it here. So we have that and that. So we are going to balance our figures. So we can do it here, 2,026,300. We are subtracting 220,300. Learners, you can see we are getting 1,806,000 as our net profit, and therefore we can balance our equation, our account, and as well as closing it at 2,026,300. Yes, and we are done. And you can bring down our net profit. Net profit brought down is 1,806,000. Yes, that's it. That's all for the profit and loss account. Next, and our last one is Laketi Traders balance sheet. So we start by the heading Laketi Traders balance sheet. As at 31st December 2009. Then we draw a capital T. It's the format I prefer because we are able to separate assets on one side, capital and liabilities on the other side. So on to our first fixed assets. So we start with our fixed assets. We're going to have two money columns on our debits. Not debits, but on our asset side. Remember, balance sheet does not have a debit nor a credit side. It's just the asset side and the capital and liability side. So we have our fixed asset, premises, which is 850,000. So premises, which is 850,000. Then the other one is a motor vehicle. This one, motor vehicle, we have equipment there. So motor vehicle. Our motor vehicle figure is 800,000. We have 800,000. Then we have equipments. Now equipment is 550,000. 500. Yes, 550,000. 500. Then we have furniture, which is 350,000. Furniture, which is 350,000. Furniture, 350,000. And that's all. I don't think we have another fixed asset. Those are the fixed assets that we have. So we add 850,000 to 800 to 550, then 350, and our subtotals should give us 2,550,500. Then we go to the current assets. So first and foremost, we start with the stock. Yes, So how much was stock? 75,000. Stock amounted to 75,000. Then the other one is debtors. We have debtors. Debtors, we are getting a figure of 650,500. Yes, 650,500. 650,500. Then we have a bank somewhere. I saw it. Yes, bank, which is 200,000. We have bank. Bank is 200,000. Then we have cash. So cash somewhere here. Cash in hand, 150,000. Yes, so cash is 150,000. Then let's do the subtotals here, which gives us 1,075,000. 1,075,000. Those are our subtotals for the current assets. Then we proceed to the other side where we record capital and liabilities. So our capital, look at it, it's here. Our capital is 1 million. 1 million. Our capital is 1 million. Then remember we had some net profit. So we add net profit, which is 1,806,000. 1,806,000 to give us net capital of 2,806,000. Then we proceed. Do we have any long-term liabilities from our business? No. If we look at that one, we clearly do not have any. Yes, so therefore we go straight to the current liabilities. Current liabilities, which we have creditors. We have creditors somewhere here, which is 820,000. 820,000, and this business seems to be doing well. So therefore, we can balance by summing up the asset side and the capital and liability side. So learners, if you are watching this and you have not subscribed, please subscribe and hit the like button. Thank you. So we move forward. Get our totals on both sides, and remember to double underscore. So we add this and this to give us that one. Then we have a 5. We have 500. Yeah, this one was 500. We omitted this one, supposed to be here. Yeah, so it's an error. Sorry for that. So 5 plus 5 is 10. We carry 1. So we have 6 here instead of 5. Yes, a 6 there. And we have 2 and 6 and 3. Yes, 3,626,000. Then on this other side, again, let's see whether it's going to balance. 6, we have a 2, we have a 6, and 3. Yes, our balance sheet has balanced. Yes, and that is how learners, you're supposed to have tackled that type of a question. Yes, bye bye for now. See you in our next lesson. Please comment on the areas that you'd like us to handle next. Bye for now. Now the best.